Okay, so in this video, we're going to be talking about the easiest way that anybody can become a millionaire. And no, don't worry, this doesn't involve selling a course. It doesn't involve setting up Amazon FBA, setting up dropshipping, none of the stuff like that. It's going to be a very easy step-by-step guide on how pretty much anybody can become a millionaire. So if that sounds like a good topic for you guys, make sure you take a second to drop a like on this video. It really does help out the channel and it only takes 1 second of your time. But before we get into the exact specifics of how you can become a millionaire, let's just go over one of the kind of guiding principles that the more money you earn, the quicker you can become financially free. So the first bit of advice here is, of course, to invest in yourself. Now, as cliche and as cringy as that sounds, it really is solid advice. So for some people, that may mean going to college. For others, if they want to start a business, it may not require going to college. It basically means just invest money in yourself in order to put yourself in a position where you can get into a job that is paying you well and that you enjoy, hopefully. Or if you want to set up your own business, it may simply mean just buying some books and researching the topic and becoming an expert on it. Another tip when it comes to this kind of the more money you earn, the faster you'll be financially free, is to consider asking for higher wages in your company. Now, of course, that sounds a lot easier than it might be, but the principle of if you don't ask, you don't get definitely applies here. So if you've been working in your company for the last 2 or 3, maybe even 4 years, and you've been around the same salary range, don't be afraid to go into your manager's office and discuss why you feel like you may deserve a raise. Now, of course, if you're doing lackluster work, don't expect to just go in and get your raise. Make sure that you can go into there and show the key points on why you deserve a raise. So for example, you may be doing some work outside the scope of your daily activities, you may be taking on some extra work, you may be adding value in other areas of the business. So go in there and basically sell the case to your manager on why they should be offering you more money. And in probably the likely event that you don't get offered more money, don't be afraid to move jobs. Again, something that's a lot easier said than done, but there's no harm in looking. You can always put yourself out there, apply for different opportunities while holding down the same job. By no means am I saying quit your current job and go out and find a new one, but you can still work your current job and be actively in your spare time looking for different opportunities and surveying the market and what kind of jobs your skills can get you. And in general, once you move from one company to another after you've gained some experience, you'll be able to get higher wages. Now, I just want everybody to note that I'm not saying any of these things are easy by any means. Of course, it's a very hard thing to do to go into your manager and ask for more money, or even it can be quite a draining thing to be putting yourself out there looking for new opportunities. But I'm just tying back to the principle of the more money you earn, the quicker that you're able to be financially free. Everybody says that you should definitely find a job that you love, and I 100% agree with that. I would definitely choose happiness over money. Generally, people are trying to get money in order to find happiness. So if you found the happiness without the money, of course, stay in that job and be happy with what you're doing there. But for everybody, it's not the case where you'll just go into a job and immediately love it, but that doesn't mean you should just leave that job. Generally, if you are a younger person, maybe in your early to late 20s or maybe even in your early 30s, and you're working in a job that you don't exactly love but is bringing in good money, as Gary Vee would say, just kind of suck it up for a while.
Just put in work and enjoy that. Enjoy eating shit and dirt and bleeding.
Now, I definitely don't agree with Gary Vee and everything he says. I feel like he's a bit extreme in some regards, but that principle of the younger you are, the kind of more risks you can take, and the more you can kind of push yourself a little bit harder. And as you start to get a little bit older in life, now that you've done the hard work in terms of putting in the long hours or working at a job that you don't particularly like but for good money, you can start to move into something more that you enjoy, and maybe it's for less money but it's something you enjoy more because you've already put in your hard work and you've built up quite a bit of money over them previous years. Okay, so now that that first part is out of the way about earning more money, let's see how you can put that money to use in order to become a millionaire. The first thing we're going to look at is pension investing. Now, I have done a previous video on this. If you want more details, I'll leave it linked up there in the iNotification, but we'll touch on the basics here and essentially the benefits of investing in pensions. So a couple of names can fall under pensions. So for example, PRSA, AVC, and employer contribution pension, there to name a few of them. What's happening here, and I'm going to speak with particular reference to Ireland, but it's generally the same principle everywhere. Essentially, you're taking money that you've earned, that you'll get tax relief on, and investing it into a fund, generally that is actively managed by a company. So here's an example of how it works. Let's say you're earning over 35,300, which is where you go into the 40% bracket within Ireland. Anything below that is 20%. And let's say of your gross wage, you want to invest €100 a month into your pension. First of all, if you were not to invest that €100 into your pension, only 60 of that would hit your bank account once tax is applied. So essentially 40% tax on that €100. Now in the case where you do invest that €100 into a pension, 100% of that money goes into your pension. So essentially you get tax relief of 40%. So again, the way to look at it, if you don't invest in a pension, you'll end up with €60. If you do, you'll end up with €100. When that €100 is invested in your pension, depending on how you have it set up, there's different risk profiles, but essentially it's put into different equities, potentially some bonds as well, and your money will grow there over time. A good way to look at it is, would you rather give €40 to the taxman right now, or would you rather put that extra €40 towards retirement? Now, when we're looking at a small amount like 100, of course that will still add up over time, but you may think it's not even worth it. But when you start to scale it up and even look at maybe €1,000, if you're getting €400 tax free on that you can put into your pension, it really does start to add up. As well as that, many employers also offer something called an employer contribution, and this is essentially where you may opt to put in maybe 5% of your gross paycheck every month, and then your employer will match that with 5% of their own, maybe slightly less. They may give you an extra 2%, or they may give you even more than what you put in. So you could put in, for example, 5% and they could put in 8%. And this starts to add up to a lot of money. So it's definitely worth checking out if you are currently employed, checking out what your employer contribution pension is and trying to max that out if your circumstances allow. One thing to note with the pension investing is that you're investing for your future self. You're investing for yourself at retirement. So generally you're not looking at 3 or 4 or 5 years or even 10 years down the line. You're looking at when you reach towards that age of 65 or whatever age you decide to retire at. So I've seen a lot of people say, oh, I'll worry about that in the future, but the earlier you start, honestly, the better that it works out for you and the more chance you have at becoming a millionaire. As well as that, pension growth is generally tax-free, so your investments grow tax-free. The people who manage these funds actively buy and sell, but there is no tax on them, seeing as it is within a pension. So as I said, that all grows tax-free, and you also get a big lump sum that you can take out tax-free when you do retire. And then any further withdrawals from your pension amount will be liable to some tax, but it generally would depend on how much you're earning that year. And if you're in retirement, it'll be a small amount that you're getting taxed. But as I said, I've already done that video on the PRSAs and going over them in much more detail. So if you're interested in them, definitely go ahead and check that one out. Now we'll look at in just a second a compound growth calculator to show how easy it is to actually reach 1 million. I know when I'm talking about just putting in €100 into a pension each month, 1 million sounds like a long way off, but we'll get to that in just a second. So the second thing that you can do, and you can also do this in addition to your pension, is just investing in ETFs and index funds yourself. For example, you have apps like Buck0. You can check out the link down in the description below if you want a free share over there, as well as DGiro and Trading 212. All of these offer very easy access to invest in ETFs and index funds. So one that most people would have heard of is the S&P 500 index fund, and that essentially tracks the growth of the top 500 companies in America. And on average, you could expect to see about 7% annualized returns on that one. Sometimes it can be higher, above 10%, and sometimes it can be lower, maybe 3, 4, or 5%. But on average, it would generally give you about 7 to 8% returns each year. So I know this can be hard to visualize, so let's jump into an online growth calculator and show you guys just how easy it is to reach €1 million. Okay, so for this, I'll leave a link down in the description below, or you can simply just search online growth calculators and you'll find one online on some different websites. I'm using a US one right here, but we'll essentially just pretend I'm putting in euro amounts. So let's say we have an initial investment. This is going to be for the personal ETF investing. Of course, the same can apply for your pension, but let's just say that we start off with an initial investment of $5,000 or €5,000. We'll say everybody can come up with that relatively easily. And for the monthly contribution, now of course this will vary. The earlier you are in your career, the probably less that you can put in, and the later you're on in your career, the more you can put in. So let's go ahead and put in an amount of 800. As I said, it's probably more than people can do when they're younger, but probably less than when they're older. So 800 I think is a reasonable amount to kind of average out the whole time. So you have initial investment of 5,000, then we'll put in 800 every single month. And then the length of time will go 40 years, and we'll see how that works out. So essentially, if you're 25 today and you do this for 40 years, let's see how much you end up with. Now for the estimated interest rate, we're going to go with our 7% that I already mentioned here. And then we'll go down to annually, and then we'll go ahead and click calculate. So you can see here that at the end of the 40 years, you will end up with €1,999,369. So not only are you a millionaire, you're nearly a multi-millionaire. And if we have a look at this chart here, you can see it in a little bit more of a breakdown. So we can see when we hit the 1 million mark, that will be after, okay, I think it's just about after probably 31 years, you'll become a millionaire. Now, of course, 30 years is quite a bit down the line, but again, nobody becomes a millionaire overnight really, unless you're winning the lotto or you got lucky on some altcoin, I guess. But I did say this was the easiest way to become a millionaire, because essentially all you have to do, invest your initial sum into an index fund, Then just add in your monthly contributions. You don't need to worry about if the market is up or down. Just invest on a consistent basis, something called unit cost averaging. And then essentially with little to no effort, in 30 years, you will be a millionaire. And again, I'm not saying just put all your money into this every month. I've tried to put a figure there that's somewhat reasonable. Try to average it out between maybe if you're able to do 400 a month when you're around the early 20s. And then as you get into maybe your late 30s, you can start to add up to that maybe 800 or maybe even a little bit more. But yeah, play around with this calculator yourself, guys. Maybe put in some figures that are more realistic for your situations. Maybe you're able to invest a lot more every month, or maybe it's quite a bit less, and just figure out how long it will take you to become a millionaire that way. So some people may be disappointed that it will take 30 years to become a millionaire by this method, and of course there are different things you can do in order to get it, but as I said, I'm strictly talking about the easiest way to do it. Now of course this is not 100% guaranteed, because as I said, the fluctuations in something like the S&P 500 in terms of interest rate, it can be less some years, more some years, but we're just averaging this out, and generally the stock market continues to go up, so we could probably expect a good likelihood that this would happen. And then when it comes to your pension, essentially it works the same way. We can get that kind of interest rate. It'd probably be around the same percentage interest rate. Generally things follow the S&P 500. So you could achieve your goals even quicker if you're using it for your pension investing. The good thing about the personal investing, in addition to your pension investing, is that you can really have an outlook of maybe 3 to 5 years. If you're trying to save for a bit more for a mortgage or something like that, you could use the personal investing opposed to the pension investing, because as I said, the pension investing, you don't get to realize that until you've reached retirement. Additionally, we can also look at another area, which is real estate, and it's something that I am hoping to get into over the next couple of years. And there are a lot of different things such as tax relief you can take advantage of in order to grow your wealth using real estate. So the term house hacking essentially means you go ahead and you purchase a house, maybe with yourself or with a partner, and you'll get one with an extra bedroom or maybe an extra 2 bedrooms. And essentially what you do is you live there, you're paying the mortgage, but then you also get someone in to rent one of your rooms, and then they essentially pay for some, if not all, of your mortgage. And essentially you get to live free, but also build up equity by paying down the mortgage. Of course, this is not an easy thing to do, especially in the likes of Ireland right now. It is quite hard to get on the property ladder, but it's definitely not impossible. And in the case of Ireland, you can get something called a rent a room relief, which means you can get up to €14,000 in rental income, 100% tax-free each year. So that really is a quick way to start building up your wealth if you're able to secure a property. But in summary, it is not impossible to become a millionaire. Many people see that figure as unattainable, but it really is not if you just strip it back and follow a step-by-step guide, somewhat similar to this one maybe. Some general overarching principles as well, I'm sure you've heard it before: live below your means. So for example, if you're working in a job and you're getting by just fine and you get a promotion, try to still live off what that previous salary was and invest or save the difference. Also, don't be too frugal with your money. You know, you have to enjoy life. Life is short at the end of the day, and you don't want to waste all your early years just trying to save for your retirement. Enjoy your life, go on them holidays with your friends, spend things on experiences, and just, as I said, enjoy your life. And I'll leave you guys with this final little saying here, which is one that I try to live by, which is don't spend money you don't have on things you don't need to impress people you don't even like or care about. So guys, hopefully this video was helpful for you guys. If it was, make sure you do smash that like button. I'd really appreciate it. And if you're new around here, make sure you do subscribe to the channel as well. Hopefully this has given some insight into how achievable becoming a millionaire is. It's a long road, but it's also one that doesn't require much effort if you just stay on track. And also, don't get too caught up on the idea of €1 million or $1 million. It's basically just a figure that people like to aim towards, but you don't need that much to live. It will depend on your own situations. Some people could be happier with a lot less, and some people may actually need a lot more. But anyway, I recommend checking out that online calculator. Just play around with it and see what is achievable for you. Thanks for watching, and I'll catch you in another video.